Good evening to you all, and welcome to the 16th episode of Market Replay. If you are tuning in for the first time, I am your host Koketso Diklakanyane, founder and chief technical analyst at Ace Forex Academy. Just to shed some light on the purposes of delivering these videos, and that is simply to just give my understanding and perspective that I take over the forex markets, right? And how I do that is that I review a day's worth of price information in the form of candlesticks, and from that information I will then be extrapolating the different areas of opportunity and how we could have exploited them, right? To not waste any time, for today's episode we will be looking at the euro against the Australian dollar, and we will be looking at market data that's pulled from the 28th of July, which was this past Tuesday. Right, so let's start. As you've picked up the trend from all the previous videos, what I like to do is start by marking out the trend. So for the euro, the day started off bearish. However, that didn't last very long, and the bulls kicked in but failed to continue the trend, and the market went back to the downside, right? And then we had this big area of consolidation over here, right? This big area of consolidation before the breakout, and this is our area of opportunity. Like I have been saying in previous videos, that you don't want to enter trades at their peaks, right? You don't want to join an uptrend at its peak. You don't want to join a downtrend at its trough, all right? Because steam is likely to run out there. You want to wait for markets to collect itself, have a pause, and then gather more steam before then continue with the breakout. Okay, and that's what we have in this case, right? The market was moving to the downside, but we had a big pause, as I've marked out there, and then it continued to push to the downside, right? So the euro kept falling against the Australian dollar. Okay, you can see that the trend continued to the downside with lower lows and lower highs being given, another set of lower highs and lower lows, and this is how our day ended, with the last bit of consolidation that we have over here, right? Now looking at the overall picture, we can then see that on this day we were presented with two areas of opportunity. Let's have a look and dive deeper into them to have an understanding of how we would have traded them. Okay, moving on down to a lower time frame. Like I've been saying in all my videos, is that what you want to do is start on your left before going to your right, okay? And that then allows you to have a forecast of history into the future, right? Now what we can then see here is that we have the formation of a swing low, which then gives us our area of support, right? This is our entire area of support. Okay, and with this being our area of support, we then know that should price enter this region, there's a probability that price might turn around, and there's a probability that price might then break through, all right? Because we know that the buyers are kept in this particular region of the markets, which then represents our area of demand. Okay, now let's just pull out our modified Fibonacci tool, right? And with our modified Fibonacci tool, what I then said with the strategy is that we are basically waiting for retracements that close far above 50%, right? And we can see that that's what we clearly have with the close of this bullish candle. Okay, and now with that understanding, what it then indicates to us is that we need to close past that low before we can consider taking a sell position. Okay, let's readjust our Fibonacci tool and forecast our TP regions on the close of this bearish candle. And what we can then see is what we are always striving for, right? Our minimum TP region of 1:1, right? The 1:1 risk reward ratio sits well above our area of demand, okay, or our supply zone, okay, and then the further area of 1:2 then exceeds that, right? With this opportunity here, this is more than enough a reason to take the trade. So we took the sell on this particular pair, right, which is the euro against the Australian dollar. And upon taking the sell, what we can then see is that we had strong momentum push to the downside, all right, with price then coming and hitting our 1:1 risk reward ratio target, right? And with a partial close on the position, the remaining position was then left to run, and we can then see then we closed on a 1:3 risk reward ratio, all right, because this is where we pushed it to the max. As you can see, price then took a pause and turned around. So that's how far we let it run, right? And looking at this was a very simple trade to take, very straightforward, nothing complex about it, and it was very rewarding because it far exceeded our initial profit target that we were hoping for, which was the 1:1. It went as far as to 1:3, right? And that's how we took this particular trade, this particular setup on this pair. Okay, let's move on to the next one. Okay, now let's have a look. Like I always say, you want to start on your left before going to the right. Okay, so what we then see presented to us over here is a swing low, right? And what does a swing low then give us? It gives us our area of support, okay, which then further represents our area of demand. All right, now with that understanding, remember we pull out our modified Fibonacci, and we are only interested in retracements that exceed 50%, okay, and we have that on the close of this bullish candle. However, using our period separator, we can then see that this falls out of the day's range. So in this case, this was a missed opportunity because the day had already ended. All right, and that's how we would have simply traded the euro against the Australian dollar. Let's move back to our largest time frame and just have a brief discussion. So what we saw for this particular trading day for the euro against the Australian dollar is that the euro was weak against the Australian dollar, right? The euro took a fall for the whole day. We had a very bearish day, right? We had two trading opportunities presented to us, but only one played out, and from that one trading opportunity we were then able to secure a 1:3 risk reward ratio trade. And that's a fairly good day, right, considering that our minimum target is 1:1. So we managed to walk away with a target that's 3 times bigger than our minimum. Okay, and that's how events played out for the euro against the Australian dollar. All right, now to sum it up, I just want to request of you to please like the video if you have found the video to be very insightful, and if you have found it to be value adding to your understanding of the forex markets. Okay, if you have not subscribed, please do hit that subscribe button, and if you have already subscribed or are in the process of subscribing, please do hit the bell notification icon as well, so that you can be alerted the next time I upload a video. Right, ladies and gentlemen, thank you for tuning in to this episode of Market Replay. I'll see you on the next one. Cheers.